Hello, and welcome to South Australia's only online monthly property report. No adverts or brand push, just helpful information, forecasts and tips for people working in or interested in real estate. In the next 5 minutes, we'll answer the question, how's the January and early February market in South Australia? And then, what's this mean for you? Before moving on to a few tips on how to take advantage of the latest market conditions. So first, some stats and facts. In comparison to the same time last year, the median price for a South Australian property for country houses has increased by 8%. Metropolitan house prices have increased by 5.4% and metropolitan unit prices increased by 5.8%. Overall, South Australian median house price has increased by 7.1% and now stands at $379,000. As a result, South Australians continue to enjoy not only the most affordable housing on the mainland, but also the country's most stable property market, with 37 out of the last 41 quarters showing steady price growth. However, large numbers of new properties have continued to come onto the market, with stock levels anticipated to peak in February. As a result, the months of January, February and March are likely to show little to no price growth, and there's even a slight chance of a very small price fall for the quarter. So right now, it's a particularly good time to buy property in South Australia. If you're a seller, there's no need to panic, but it is more important than ever to be realistic in your pricing expectations and preparing your property for inspection by a potential buyer so it looks its absolute best. For some good buyer and seller tips for the current market conditions, just click on this link to view last month's SA Real Estate Report on YouTube and jump forward to the 4-minute mark to get the tips. The rental market report remains the same. South Australia's average rental vacancy rate is just 0.9%, with less than 1 in 100 rental properties available for tenancy. This will be as good as it gets for would-be renters for the foreseeable future. Interest rates remained on hold again this month, and despite recent national and world events, leading economists continue to forecast that they will remain unchanged until April, with 2 or 3 small increases likely to occur after then. Now, as the current market is virtually the same as December's, rather than repeat the tips given in last month's video, I'll give a few buyer and seller tips that will help buyers and sellers dealing with finance offers to get exactly at what they want quicker, safer and at less mutual cost regardless of the market conditions. Now, it's important to know most buyers do not apply for finance they will need until they find the property that they want. So unless they have substantial funds available to them, they submit an offer which has a subject to finance clause. This makes the offer less attractive to the seller as it has a large amount of risk attached to it. For example, if the finance is not approved, it will take approximately 2 to 8 weeks for the buyer and consequently the seller to be advised that the sale is not going to happen. That's 2 to 8 weeks that the seller has missed buyers who might have bought the property, and 2 to 8 weeks added onto the public's perception of how long that property has sat on the market at the same price without selling. And guess what buyers are starting to think? As a result, it's now harder for the seller to get the same result they could have got 2 to 8 weeks ago when dealing with other potential buyers. Now, while it is a reality that good proactive agents can overcome or even negate the seller's risk of missing buyers, suffering longer sales times, or even a price reduction that can result from failed finance clause offers, it is also a reality that some agents do not prepare for such eventualities. The original buyer also suffers if the deal fails to go through. They risk losing their deposit and missing out on the property that they have worked so hard to get, and the stressful realization that all the time, effort and emotion that they've invested in their property search was wasted on properties outside of their price range. As always, the best way to avoid danger is not to put yourself in a dangerous position in the first place. This applies for all parties. So buyers, if you're serious about buying and getting the property for the best price you can, find out how much you can secure from a financial institution or a broker, and then take the next step and get it pre-approved before you start looking. Remember, this will make your offer more attractive than a conditional offer of the same value, and may even win against a higher offer that has conditions attached to it. The less conditions, the more attractive the offer and the better your negotiating position. Sellers, if faced with a conditional offer, ask your real estate agent, what happens if this goes wrong? Have them and yourself practice what I like to call healthy paranoia. If your agent can't give you good, well thought out answers, then tell them to go and get someone who can, even if it means bringing in a more experienced member of their team. Remember, your agent is on your side. They want the best result for them, and that means getting the best possible result for you first as a priority. Well, that's the indicative SA market report for January and early February. If you have a question you'd like answered in our next broadcast or sooner, just contact me via Twitter at rhSA_CEO or email me at kevinm@rhsa.com.au or talk with one of the friendly team at your local Rain and Horn office. Thanks for tuning in, and until we catch up again, I hope you enjoy good things.